Great. So, hello, this is Francesco Barbera Corporate Law, and I'm really excited to be with Lynn Carpenter, a partner at EPOCH Pi, which is a purpose-driven investment bank based in Ohio that focuses on really bringing a kind of values and purpose lens to investment banking activities like M&A transactions and capital raising transactions. So we're real excited. I'm very excited, Lynn, to talk to you about what that looks like. A lot of our clients are in the process of raising capital and in the process of searching for the right investors and partners uh, and I know from experience that that process, you know, choosing the right investor it's like it's not just, not every dollar is equal. When you have an investor who is also a partner in the business at a deep level, it can be such a transformative event and really an impactful and thing to a company. Um, and so I'm just excited to hear about the process that EPOCH Pi uses, and what's distinctive about it when you're helping clients find the right investors and go through that process. So I thought maybe, Lynn, we could start with you sharing with our listeners a little bit about your background and how you kind of arrived at EPOCH Pi and how EPOCH Pi came into being and the vision behind it.
Yeah, sure thing. So I have been in financial services for the majority of my career. Um, really started in banking and then moving over to private equity, where I've worked on both control and non-control transactions, um, varying structures, from ESOP transactions to recapitalizations to buyouts, to control and non-control, varying industries and varying geographies. And I think in 2009, my partner, Bill, he claims it was on Easter, but he was Googling his next book on philosophy and Googled consciousness, and up popped an article by John Mackey entitled Conscious Capitalism. John Mackey is the CEO of Whole Foods. And he read, it's about a 15-page article, and he read the article and the four tenets of conscious capitalism being higher purpose, a stakeholder approach, conscious leadership, and conscious culture. And it really resonated. And he shared it with me and he said, I don't know how we're going to incorporate this into what we do, but we're going to find a way. And as you know, or might know, the capital markets are not known for looking at much other than the bottom line and returns. And so we were at a prior investment bank and very much wanted to be a B corporation, so that was something that would demonstrate that we actually walked the talk in a world that's pretty skeptical of greenwashing and putting a marketing spin that wasn't really real. And so we spun EPOCH Pi out in 2016. We became a certified B corporation and really focused on helping, what I would call values-led, mission-driven, culture-focused, socially conscious impact companies. There's lots of labels, but it's really companies that believe in triple bottom line and things beyond just maximizing value. And so it's our hope to help those companies, maintain their purpose, their culture, their mission, and their legacy for the long term. But that's ultimately how we came to birth EPOCH.
Well, that's amazing. Do you feel like having been involved in conscious capitalism and the formation of the LA chapter, I'm familiar with the four tenets and kind of enthusiastic about it. So let's just turn to the capital raising process, right? And given what EPOCH Pi is up to, like, how would you distinguish a capital raising process that doesn't have a purpose or values driven lens from one that you conduct at EPOCH Pi? What does it kind of look like process wise that is different?
Well, so, financial terms, price, value are still important. But we also think that transactions should be about mission, people, values, culture, and being stewards of the companies we build, lead, and ultimately transfer. So in order to preserve mission and in order to preserve purpose, we bring into the process, so it's additive, sort of this culture lens.
Mm-hmm.
And it's, I guess, think about it as companies are entering into a marriage of sorts.
Mm-hmm.
And marriages always hit rough patches. There are times when things don't go according to plan, when things are stressful, and so evaluating partners around things like core values, organizational purpose, leadership style, people philosophy,
Mm-hmm.
decision making, communication style.
So Lynn, is part of does that mean that part of your process involves helping a company, a team of entrepreneurs to actually articulate those values? And because I can't imagine, I mean, I'm assuming that in some portion, perhaps even most of your clients, I don't know how well articulated are these things, and for the purposes of then sharing them with prospective investors and having a dialogue about them.
Yep. Yeah. So it can include helping them articulate their values. It can incorporate, what is important to you in a transaction. What ideally would a partner look like?
Mm-hmm.
What ideally would you preserve? What is important to you and this business beyond merely the product or service you're providing. And so it's one, helping, and many of our clients have already articulated their core values and their purpose, but not all.
Mm-hmm.
So it's thinking about what are your core values? What do you value? What do you value in the business? And what do you value in a partner?
Right.
And so it's bringing into that process. So more often than not, it's the investor that's doing all the due diligence
Right.
on the company, and very little of a company doing its own due diligence on a investor or a buyer. And so it's asking throughout the whole process, so
Mm-hmm.
throughout the continuum of the process, it's asking questions and it's sort of training the team how and what questions to ask, like asking investors, like, why do people come work for you? What are your core values?
Mm-hmm.
How do you know if a investment is successful? How do you measure that?
Mm-hmm.
How have you dealt with a non-performing investment?
Mm-hmm.
In this world of impact, there's often a conversation around investment time frame, and so you might find a partner or an investor that is very aligned, but they might need to exit in 3 to 5 years. So there are questions around, hey, investor, when do you think about exiting investment and why?
Mm-hmm.
What are your measures? Do you have any experience in memorializing or documenting mission and impact? Can you give us some examples about portfolio companies you've invested in and what sort of metrics you might track beyond return? Are there impact metrics or are they mostly growth metrics?
Mm-hmm.
And so it's asking a lot of the same questions as a traditional process, but there's some additive questions around culture, values, impact that are also very important to inquire about.
Right. Fascinating. So then, as an investment bank, are you sourcing potential partners and investors that through that lens as well? And so, do you play like an initial screening role? Are you only kind of working with potential investors that have kind of opted into the EPOCH Pi kind of philosophy? How does that look?
Well, so there is a universe of what I will call impact investors, and
Right.
it is still very small in the grand scheme of investors. And so we have a database of impact investors, but we also are of the belief that there are a number of traditional, what I'll call traditional investors that could very well be in alignment with many entrepreneurs, but they may not lead with values and they may not lead with
Right.
impact.
Right.
And so, but there also be traditional investors that will not be in a line that we are aware of, that we will not go to. And so it's really cultivating a list of what I would say both impact as well as some traditional investors, and going throughout the process of inquiring and asking those questions around, as I said, culture, values, and impact. And
Yeah.
so we don't limit it, in our opinion, to just what I'll say impact firms, because they're still a pretty small universe.
Yeah. Yeah. Now, I guess for people who, you know what, I think I would really love to hear your perspective on it. I think that it's pretty easy to have this conversation at a pretty abstract level, but I feel that it would be really valuable to paint a picture of why, in your kind of practical experience working with entrepreneurs, why this lens is important. You know, from a practical standpoint, or from a perspective of, you know, an entrepreneur who's trying to grow a successful company and an impactful one. Like, why wouldn't is this values lens kind of like a nice to have? Is it like a bonus, or is it, from your standpoint, kind of fundamental and essential, and really kind of a deal breaker? And how do you think entrepreneurs should be thinking about it?
Yeah, so I guess I would say if there's a real desire to preserve or enhance your purpose, your culture, then in my opinion, adding this lens to the process is critical. There's a statistic where something like upwards of 70% of mergers and acquisitions fail. It's something between 70 and 90%. They fail to meet the desired goals. And the number one reason for that failure is culture incongruity. And so, while that might be more specific and related to strategic mergers and strategic acquisitions, it can be equally true with financial investors. Because if there's cultural incongruity, It's hard enough to grow a business without misalignment, without team members, partners that don't have the same vision, or when there's stress, approach it very differently.
Right.
So adding this lens and this questioning and due diligence really brings out red flags, or it brings out synergies.
Right.
And or it brings out ways to structure a transaction that can preserve the intangibles and can preserve some of this culture. And you know, you being a lawyer, perhaps some of it may not have legal strong teeth, but it could have very moral obligation. And so trying to ferret out some of the potential issues is just it's additive information to the decision-making process.
Right, right. Yeah, it's like in any negotiation, you're learning about what people, what is motivating people, what they care about, what their interests are, and it's useful to know that and discover that in the process, so that you could discover if there is enough compatibility and structure the relationship in a way that's kind of win-win, and that's kind of what you're getting at. This is just
and paradoxically, it's in both parties' best interest.
Right.
It really is in both parties' best interest. So creating those win-wins, you know, makes all the sense.
Yeah, you could see how it's essentially, like you described the process as additive, and it's really like to me, it sounds like a process where facilitating a process where there's just, in a way, more disclosure, but it's like disclosure of intangibles that, you know, it wouldn't necessarily show up in a data room, like a deal, you know?
Right. Yeah.
Yeah.
That's exactly right.
Yeah. And so with disclosure comes generally better transactions, right?
Yes, that's exactly right.
More
and it's
informed.
Really trying to help educate the team on things to think about and things to question and things to better understand. You know, when there's more transparency and there's more open dialogue, generally better things come from that.
Right, right. So, I mean, do you feel like I think there's likely a concern among entrepreneurs in general. It's like, I think that, at least in my experience, really the priority is getting money in the door, right? I mean, and they want to make sure that they're presenting their company in an attractive light. And I think most people are viewing that as showing growth, really, like the market opportunity and the size of it and financial projections and so forth, right? And I certainly see skepticism, a fair amount of skepticism about investors and what they're really caring about and what their motivations are and so forth. And so I'm curious, Lynn, to the entrepreneur that has that kind of orientation, you know, like what do you have to say about that?
Well, I guess, you know, companies are made up of people, and people come at this with different experiences, different needs, and from different places. So I understand it, you know, an entrepreneur's need to raise capital first and foremost. But it's also their duty to do their own due diligence and ask questions. And culture and fit and values is just one subset of those questions as they seek new investors. And, you know, these new investors or investors generally are going to have significant influence, if not outright control, and therefore are going to contribute to the success or failure of that entrepreneur's business. And so having the alignment, the most aligned partners, it's not going to be, perfectly aligned all the time, but trying to screen for the most aligned partners you can when a company goes through the ups and downs of business. There will always be stumbling blocks. There will always be issues. There will always be bumps in the roads. And who you're partnered with and how they're going to respond will either be additive or it will add to the stress.
Right.
So, or it could also add to the downfall. Life is short, and while yes, entrepreneurs need to raise capital, they also need to think pretty long and hard about who they're getting into bed with and how they're going to behave.
Yeah, I mean that makes a ton of sense. I mean these it's there's just the difference between having a partner that is there to weather the ups and downs with you and shares a similar perspective as to what that should look like and how to do that and so forth. This ultimately just can be just tremendously significant in all kinds of ways to the trajectory of a company. That makes sense.
Well, you do hear a lot. I mean, to your point, and the fact that you asked the question, right, signifies that a lot of entrepreneurs think about, I just need to raise the capital. I just need money. I just need to get this to the next level or get it going.
Right.
But just adding some additional questions into that process
right.
can really be more beneficial longer term.
Yeah. Yeah, I mean, and taking the wrong capital, like from getting money in the door and becoming a partner with someone who's got fundamentally incompatible visions for the company and the direction could very rapidly lead to a downward spiral of bad outcomes and stalemate, and I've seen that as well. So
we actually have just really quick. We have a really interesting client who we've worked with for a couple years now, actually, and we've both evolved together. And one thought process, the thought process now is let's lead going to investors with our mission and our values. And one of this company's values is love. And when you go to traditional investors, seeing a pitch deck that leads with a lot of these issues can be like crazy. And what is this? But our client is of the mindset of let's eliminate those parties that we're not aligned with at the outset. If this is weird to them, or if leading with values and leading with purpose is uncomfortable, or they ignore it, or it's unimportant. Now this company has been in business for 20 plus years, has pretty significant revenues and some cash flow. So they have the luxury of really being able to pick and choose when they have a transaction and with who.
Right.
But it is interesting. There is a continuum of how you lead with this, how much you incorporate it, and even how you incorporate it. Because some investors are pretty savvy and can answer questions.
Right.
And tell you what you might want to hear. So it's again trying to interject some of that questioning and understanding with the team
Mm-hmm.
ask it in a way that isn't necessarily obvious.
Right. Kind of ferret out the truth of things.
Right, exactly. As best you can, right?
Yeah.
And most
Now,
parties are fairly transparent and honest, but you never know. You want the most honest answers you can.
yeah. Now, so let's say you get to the right fit through this kind of process, and there's values alignment, there's cultures alignment. Do you find that they're in the kind of legal documentation and the legal structuring? Any of these elements find their way into a transaction?
Yeah, they absolutely.
Yeah, what does that look like?
Well, so yeah, no, it shows up in all different kinds of ways. But just as an example, in an LOI, we will include language around a company's core values, its mission, that this is the essence of the business, and we acknowledge that.
Mm-hmm.
And it can also include, Francesco, I think you're familiar with conscious contracts and how we're going to resolve disputes.
Mm-hmm.
Going back to my LOI letter of intent example, where we include core values and mission and purpose in that letter of intent, when we've delivered that back to investors counsel, they often look at it and go, what is this? And they often want to just redline it out. But trying to incorporate some of the philosophies around what we're both trying to accomplish,
right?
Part of what makes these businesses special is exactly that, their core values and their mission. And so acknowledging it in legal documents, like I said earlier, if nothing else, provides moral obligation and a foundation of what we're trying to accomplish together and how. So it's still, we're still trying to figure some of it out, and we're still trying to kind of push the envelope on what we'll want and try to include in documentation, because most of this is pretty unusual.
Yeah. Yeah, and that's certainly my experience as well. I mean, I've seen provisions that it's always tricky, kind of conceptualizing how you go from an alignment on values to something that's kind of legally binding, and is it a good idea to make it legally binding, and if so, what exactly is the legal obligation, and
right.
and how do you articulate it? And and benefit corporations, and I know you're a certified B Corp. I mean, I think that they represent one very I like them as a solution. I think that they're not perfect, and there are some problems with I think the governance issues around them. However, I, as a general matter, think that it's a pretty good and sophisticated legal framework for embedding purpose into a company's kind of legal DNA. And I think it, in a lot of ways, it accomplishes a lot of what kind of what you're trying to accomplish with EPOCH Pi.
Yep.
So I think there's a lot of value in the public benefit corp kind of legal structure. Certified B corporations are another way where you have a kind of objective sort of way to say this is what we're about, and and I've seen term sheets where founders say, look, we're going to be a certified B corporation, and we all are on the same page that getting renewal of this certification is something that we're going to keep working towards. And and that's sort of a that puts some concreteness to it, I think, and as does the kind of benefit corporation charter and statement of specific benefits and so forth.
Well, and so kind of on that lines, one of the things that we often do is do a culture assessment. Not always. and this may be more in the realm of an acquisition. Our client might be getting acquired.
Mm-hmm.
But putting in documentation that we will do a baseline culture survey, and we will continue doing culture surveys every year. And so putting some mechanisms that help measure what's going on in the business
Mm-hmm.
into that documentation are also ways to help identify the mood and the feeling within an organization. So we're all just certified in using culture assessment tools. So we're trying to bring some of that into the process. And then
Yeah,
that
that's nice. Yeah, that's a great I mean that's a very nice thought. The whole introduction of a certain kind of metric, and saying, and I could see how, kind of introducing that into the capital raising process, that would be a very good way to flush out somebody's values, right? Is to see how they respond to that and what questions they raise around it, and if they're enthusiastic about it or think it's
right?
resisting it for some reason. Yeah, so
Yeah,
I
no,
think
right.
it's a really nice thought.
Nothing's perfect, but it's certainly an attempt to gain more information and knowledge such that, like I said, the marriage you're getting into is not going to avoid, some of the fights and some of the issues, but it will give you the best chance for both parties to find success and the outcomes that they're looking for.
Yeah, and this has been very enlightening for me, because what I'm seeing is it really is, in any good negotiation, I think is like a well conducted negotiation is a relationship building experience of, where the two parties are learning about each other and trying to find those areas where of alignment, and where there can be a mutually beneficial exchange of values. And this process that you're describing really, I think enhances that. It has at least the potential to really enhance the relationship building process, the human part of it, which ultimately is uh, just such a significant driver of everything else, right?
Absolutely. Yeah, we think so. We hope so. And that's certainly the goal.
So wonderful. And Lynn, thank you so much. This has been really, really enlightening and interesting to hear about what you're up to at EPOCH Pi. And as always, it's been really nice to talk to you.
Francesco, likewise, it is always a pleasure. And thank you. I look forward to continuing the conversation.
Thank you, Lynn.
Thank you.